Welcome back to today's morning report chart analysis videos on Thursday the 8th of September with me, Rich Perry, market analyst at Handset Markets. Let's look at dollar yen. And we had out the Japanese GDP data today, slightly upgraded on Q2 to plus 0.2% on the Q2 quarter-on-quarter growth. And it sort of plays into this continued yen strength, really, that we've seen. This downtrend channel, as you zoom out here, downtrend channel has been intact throughout 2016, and there's no real reason why it won't continue. RSI turning over at 60 again, stochastics confirmed crossover sell signal, MACD lines about to turn lower. It all pretty much looks negative again for dollar yen, and we've now had 3 bearish trading days in a row, 3 bearish candles. It looks like it's sort of developing into a fourth at the moment, but also but I mean, it's only 15 ticks down on the day, so plenty of time for that to turn round, but it certainly looks as though it's on the slide. And the only thing you would say to that is on the hourly chart there's a slight consolidation, but I think again the configuration has turned round now. Through this rally phase you had the hourly RSI consistently holding up above the sort of low, sort of mid-30s throughout this phase here. That broke down on, that sort of relationship broke down a couple of days ago on the ISM non-manufacturing PMI disappointment, and that's not really got back. And since then you can argue that there was just this sequence of lower highs consistently now, and the RSI sort of unwinding to 50 on the hourly gives you a sense that already this rally is sort of running out of steam. Now the MACD lines again having held up above neutral for throughout rally period, lower highs, lower lows now, and you're below the to the neutral line, and also losing impetus as well in this rally. So I think we're now sort of getting to a stage at which we're going to be rolling over. So I think this rally resistance that we had overnight today, 109.9, so 101.90, I think that seems to be sort of probably resistance in place. That interestingly came in the middle of this sort of congestion zone here, with these sort of marginal sort of lows here, and I think that the top of that congestion zone you could argue comes in around 102.40. So between sort of 102 and 101.90 and 102.40, 50 ticks worth of pretty decent resistance now on a near-term basis. I think you're going to get your next lower high, and I think you're going to be tracking lower. Chances are I think we're going to be sort of testing downside. Certainly the reaction low 101.18 from yesterday likely to come under further pressure, and then you're sort of back into these old lows again. The hourly chart actually shows you, if I take off the crosshair and zoom out, you can actually see sort of a sort of an old band of trading here between 99.50, 100 spot 95. So that would be your next sort of target area, I think, for the downside on dollar yen. Certainly with these sort of lower highs and the on the hourly RSI, I think the momentum is certainly pointing towards that as a target area. So I wish you good luck in your trading today, and I will speak to you later. Thank you.